Good morning, everyone. This is Marshall Gittler bringing you the morning comment for December 23rd. Well, I was really wrong about oil. I had thought that the technical rally in oil yesterday would last longer than it did, but in fact it started to falter by midday in Europe and oil turned lower. I guess traders agreed with me that the idea that the global economy will come to the rescue of oil markets is more of a hope than a strategy. Sentiment was hurt by more comments from the Saudi Arabian oil minister, who said OPEC wouldn't cut production at any price. The trend in the oil market is distinctly negative for the energy-related currencies, the Australian dollar, Canadian dollar, Norwegian krone, and of course the ruble over coming months. The Norwegian krone was the worst performing G10 currency yesterday. Nonetheless, oil was recovering slightly in Asian trading this morning on expectations that Wednesday's U.S. inventories data will show a drawdown for the second week in a row. I still expect oil to become more of a two-way market for now, as some short covering is likely to come in at these low levels. That should increase volatility in the oil-related currencies. Now, the ruble recovered substantially as exporters repatriated money in response to government pressure, especially as tax payment deadlines approach. Moreover, the Russian FX market will be closed from January 1st to January 12th, so investors shorting the ruble may be closing out their positions ahead of that holiday. I doubt, though, if this is the end of the story for the ruble. Now, lower oil prices and a rising dollar pressured gold, which crashed through several support levels to trade near a three-week low. Who needs an inflation hedge now? And with U.S. stocks rising into record territory and Chinese stocks doing well too, many investors see better things to do with their money than to buy gold. As for today's schedule, during the European day, we get the final GDP figures for the third quarter from several countries. Following the concerns from the Bank of England Monetary Policy Committee members over the heightened risk of growth, we could see a downward revision to the final third quarter growth rate. This could prove negative for the pound. In Norway, the AKU unemployment rate for October is forecast to remain unchanged at 3.7%. Now, we have a very busy day in the U.S. with several important figures expected to show strong growth, which may boost the dollar. I'm just going to list the indicators here because there are so many. We've got the third revision of third quarter GDP, core personal consumption index, durable goods orders, personal income and expenditure, Richmond Fed manufacturing index, and new home sales, plus some others. Overall, the strong data are probably going to show that the U.S. economy is on an upward path. This is likely to keep the dollar supported and keep confidence up. Finally, Greece holds the second round of its presidential election today. Last week, the government's candidate got only 160 votes, far below the 200 needed to win. He's likely to lose today's vote as well. The focus is therefore on the December 29th vote, when he'll only need 180 votes to win, which would avert a general election. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.